Hello guys, welcome to the Trading Parrot. Bitcoin just had a failed attempt to reclaim the levels necessary for a 4-hour breakout, but on the daily time frame, we're starting to see a bullish shift, and I have to admit that. Guys, if you like this type of content, make sure that you are subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. Can we get 1,000 likes? That will be phenomenal. Later today, we're gonna have the elite private TA that belongs to my Patreon community. If you want to be part of that and also be able to suggest which altcoins you want me to do live TA in a small group, only a handful of people get to join this. You can look for the link in the description. It's gonna be in roughly 2 hours in UK time at midday. We do it every Thursday. You need to join as an elite member if you want to be part of that. Joining as an elite not only gives you that perk, but it's also giving you some other perks. You can have a look in the description at the Patreon link. I have a new campaign with 2bit. $200,000 are at stake. You can join this event with the link in the description. 2bit is a non-KYC exchange that only requires 2 minutes to sign up. And let's go straight into the charts. As you can see in here, we have managed to come back above 100K. That has a lot of bulls claiming already victory. I can see why, but in this video we're going to look at the challenges that we are still facing on the 4-hour time frame, and we're going to look at what we have managed to achieve on the daily. What we got here is the possibility to potentially hit the CME gap on the 1-hour time frame that is currently located at 106.7. After all, we are just 3k away from doing that, but in order to get to that CME gap, the 4-hour is going to have to confirm a bullish breakout. We'll look into that once we get into the 4-hour time frame at a side chart. At the moment, the battle is against this previous support. As you can see in here, there was this level of support, and that is the one that is giving us a headache. But not just that, on the RSI, we are struggling to produce that breakout. For intra-candle time, we were in a breakout area, and I can see people in my Telegram charts and trading chat community were already noticing that. They have a very great ID. You should definitely join the community on Telegram. It's for free. But we ended up settling against the resistance. Yesterday we said that I want to achieve two things in order. I first want to see that we can break out from this area in here. I want to see a confirmed breakout against the level of 43 RSI. But as you can see, so far our first attempt has failed. We tried twice, 3 times to break above it, and so far it's been a rejection. To be fully a rejection, we need to put a new low relative to the 98k, because there's still the chance that this fair value gap is as low as we go, and then we do another attempt and we can manage to recharge batteries there and then push slightly higher. If we do that, we might as well go straight for the 106.7. that is just 3k going up. Going down into the next CME gap to the downside, that is a move at the moment of almost 6k. So 50% more energy is currently required to move to the next CME gap to the downside relative to the one to the upside. That is just a thought, it's not the forecast. It's just to make you understand that maybe there is a low hanging fruit, which is that CME gap at the top, and we pierce it. But if we do that, the cost for the market maker is that it's gonna trigger a breakout on the 4-hour RSI in here. That is gonna signify that there is strength, that we are forming a double bottom on the 4-hour RSI. Once we get to the 54, we break out and we could go into the top of the range. The top of the range is 120. Crossing fingers so I can take some profits from my long if we get there. Remember, my long is still sitting at 111k. It's underwater at the moment. If we get a rejection from here and we go for a new lower low, we're gonna be hitting the liquidity that is packed around here. So we have incentives to go into these two directions. Either we hit the liquidity on the lower end and we produce a new low, starting from 98 into, who knows, maybe 92, 93 or 95. Basically, low-hanging fruit at the 98 to 97 and low-hanging fruit on the upper end with that CME gap as well. We need to look into all the rest of the data, how it's the order book looking as well. I've seen some things that are currently not in confluence, making this scenario slightly more interesting. It is when we go into the daily where I'm starting to see some things that are looking promising. If you look at the upper end in the chart, you're going to see that we have this P. This P means percentile, and it means that the volatility on the daily has triggered a buy signal. The last time that we did that was in here on the 30th of August, and we went for an all-time high. So maybe it's worth having a look at what it means. And maybe we can even look at the past performance, focusing just on the chart. And I want you to just focus on where we get these green P signals. That means that the volatility to the downside on the daily has peaked relative to the past performance. And you can see that sometimes you get one and then you get a second one. So if you average, you can still catch some decent rallies in the bull market. If you are in here in the beginning of a bear market, which we have to look at because we don't know if we are entering a bear market or if we are about to do the last leg up or many legs up, we never know. So we need to understand what is the risk of considering this signal as an accurate one, but then we are entering a bear market. What will happen? Well, we only have past performance and that's all we can get. We can see in here that this triggered at 46 and then we have a rally into 52. This one triggered at 32 and we have a rally into 48. This one is pretty bad. It triggered at around 29 and it rallied to 32. But I struggle to find one in the bear market that didn't play out really well. Very good signal, very good quality, even in the bear market. Here we have one that triggered at around 57 and it barely moved to 59. There is upside, but if you are not well experienced in trailing with a stop loss given the current risk, you could be facing a situation where you have very limited upside and you're thinking we're going to the moon because maybe that's your bias, and then you get trapped. Imagine this one, you took this one, you go 2K up, you start counting victory, you open the bottle of champagne, and then suddenly you are facing a 55% downside in here. So if you're doing any leverage there, even at 2x, you're liquidated. 55% by 2 is 110. So you lost the account with a 2x. Imagine if you're doing a 10x or any bigger leverage is absolutely impossible. So consider that we're getting this buy signal on the daily. It's a pretty decent one. And since it's a decent one, let's look at the RSI. Do we have any confluence in here for the daily? We have a range from 73 moving to 31, a fair range, not the biggest. We have had bigger than that, and we could even say that this was the high, 78. This was just a lower high, but fair enough. And we already had a breakout from this range, from 72 to here. There was this breakout, and that was a fake out. So we are talking about on the daily a layer 2 potential breakout coming in here. And we have something else that is bullish. What else is bullish? Look at this. We pinch and we reclaim. That should really turn you on. Not here because that's going to be awkward in front of the screen. But if you look at this reclaim the green, and now we have the chance to potentially, one, put a bullish divergence, which will be painful to watch. If we get a bullish divergence from here, that means putting a low in the price and putting a high in the RSI. Or we can put higher lows on both price and momentum and create some sort of double bottom. That's the third option. Whichever we get could signify that we are ready for a daily layer 2 breakout. Remember, layer 2 is because we already have a layer 1 in here breakout, which managed to only get into 54. Now we're doing it from lower. When you do it from lower, it means that these dudes in here, including myself, it's already trapped in a long, right? I am underwater. Many people are as well, but many other people are still sitting on their hands. And that puts you in a position of advantage against me because you are entering at a liquidity hunt in here. And I'm not telling you any financial advice. Remember, we are in a very delicate situation, potentially entering into a bear market, so this is not a trade for a beginner, neither the short I'm taking. We are expecting big volatility. We could enter a recession, and you could completely get destroyed in here if you don't know how to manage properly risk. Anyways, we have this level in here that now ideally we want to defend. That's the most bullish aspiration I have. Let's defend 35.86. Second, I want to have a breakout from there, so this level can go away. We have the 41 resistance on the daily. Let's leave behind what's going on in the 4 hour. In order to get the breakout on the daily of the 41, of course, we need to confirm a breakout in here. Then we need to use the card under the sleeve. What is that? Well, that is our CME gap that is sitting in here. We need to go into 107, fill the gap, and not get rejection. We should go there and we should stay around there so that the 4 hour can breathe above water, or call it do a breakout with a settled candle 4 hour above this line. That is an early indication that the daily could be doing the same thing next. And I like that order. 4 hour, daily, then weekly, then let's resolve all the issues so we can switch bullish into the seasonality of November. But again, that's my aspiration. That's what I would like to happen to my long. But if it doesn't happen, we need to be always on the defense because there is high, elevated, massive risk of failure on this setup. Okay? So let's aspire. There is no damage on that, but let's do it in a way that we don't get wrecked. Do we have a deal? Let's do it. Right. So on the daily, we had that 41. We need to identify these levels in the price. Otherwise, these are just RSI levels and they don't really tell you much. Let's take this and let's place the 35.86. That's going to be our support, which is the green line. We ideally want to defend 102.350 on the daily time frame. No closes below that, please. Otherwise, we are going into the global support on the daily. That is 93.380. And if we go there, we take all the liquidity on the short term that we just showed here. That is heavy and is the biggest contender against the CME gap on the upper end. If we hold that, we get the biggest chances. Then we go into this 41.42 and potentially we could see a daily breakout there since this PNR applied to the Crosby ratio that belongs to the Bitcoin Magazine Pro is a paid indicator from their community. And the breakout of the 41.42 is currently at 107.946. It is moving down, so it could be that by the time that we hit the CME gap, by that time the RSI target will have come down into maybe right where we have the CME gap, which is slightly below 107. If that is the case, that timing is going to be tricky because we will have already run out of that incentive to go up because we hit the CME gap, and at the same time we are in front of a daily resistance, and then we need to look out for more incentive, additional incentive to go higher because we really need to hold the 107, which is the neckline of these head and shoulders that we need to turn into a massive bear trap to be able to go into 117 and take the massive liquidity that is sitting there. So we need this guy to come back above 106.475 and close above it on the 4 hour, and ideally, let's be honest, ideally on the daily as well. The head and shoulders is right there. Let's go back up and let's close above that neckline. Let's put a daily breakout. That in order, step by step, puts us back in track to go into the pivots of the month of November. Remember that we already lost virginity. If you're new in the channel, we're talking about charts here, so focus. This level in here got already hit. That was the 111. That is the moment where Bitcoin lost November 2025 virginity. Cute. You can take a picture if you want, but don't show it to anybody. It's going to be awkward. If we conquer 111 and we go back above 114.1, that's where this model is going to be happy. It's going to say we already went to do the task at hand for November, which was to hit that support. We did it. Now we reclaim pivots, and that is the recipe from the CPR model to then go back back into 123, which is the first resistance. Remember that volatility should be quite big this month, to the upside or downside. We were talking about yesterday with my community. There is big volatility and there can be initial moves that are fake. So it could be the case that the move down was the fake one, and then we reclaim pivots and we go with a big volatility up until 148K. In my opinion, it's low likely now, but it's doable, okay? And remember, you're not here for me to give you a forecast. So even though I think that is low likely, that doesn't mean I'm telling you my forecast is we will never go there. I'm open for that, and I'm pretty sure that I will do everything that is possible to make money out of that still, even if I thought it was low likely. So you see, I don't care about the forecast. And yeah, that's the recipe for this guy to go in that direction, invalidate this first move. Now, if we fail to reclaim pivots, and I'm not saying we are going to even manage to challenge them, we have a lot of work to do to get into 114. But if we fail before that and we take down the 99 first support, well, we have the second support that is at 88K, and we already have weekly targets talking about 88. That's still there. We haven't reclaimed this neckline, neither that neckline. So on the weekly is a disaster. We have a lot of work to do really to invalidate. In my opinion, the head and shoulder already play out. So out of the full target of almost 21K, we have already done 10K. So let's say a roughly 50% target already done. That qualifies as a good performance already, even if it's not fully complete. And on the weekly, we are below support on the RSI. That's another thing that needs to be repaired. We need to go back up above 105 to let the momentum not call for a further breakdown of price to the downside. The thing that has everybody excited at the moment is that we have so far intra-candle. It looks, if you take a picture of the screen, it looks like we have just managed to reclaim the 50 weekly MA, and I don't see a single channel out there that is not talking about that, and that could be a recipe for disaster. Okay, it's not that I'm bullish and bearish at the same time. Indeed, yes, I am bullish and bearish at the same time. I have a bias which is at the moment slightly bearish, okay, but I'm open for the price to prove me wrong, and I know where it can prove me wrong on each individual time frame. You should do your homework and do the same and find your own levels and not just repeat like a parrot what I have just said. Challenge me, and the more you challenge me, even if you are wrong or I am wrong, you're gonna learn a lot more than if you are just complacent and say, well, he knows what he's doing, because sometimes I don't. You can see that every time that we come into the 50 weekly MA, you know, it's kind of a signal that then next potentially we just get green candles and we do another leg up. So yes, we do have now potentially a scenario that can bring back the bullishness, and we are already prepared for that. We already know what to look at in the 4 hour. We already know what to look at on the daily with the CME gap, how we need to use it, how we need to survive 107 to get us above the CPR pivots, and all of that. You can watch again the video. But if any of that fails, the chances that we come below this 50 is on the table. We have an 88 target from 2 different time frames as a target, daily and weekly. So we cannot neglect that. We need to stay focused. We have some mild capitulation on Bitcoin and some more intense capitulation on Ethereum in here. We are having these SOPR signals, and if we go back in time and we look at the bear market, because that's what we need to do when we look at bullish signals, we need to do backtesting with the eye. In here we have one signal of the SOPR that trigger in here with an upside of almost 10%, this trigger at 49 and this rally at 52. But if you average down and let's say you have this average that was a 7% up, this was 9% up, and this was closing there 28% up. So there was upside from signals that were telling you that too many people were closing at a loss. Okay, let's be safe. I've been playing a game. Yeah, I've been playing this game, Assassin's Creed Valhalla. Wow, amazing views, and I only paid like 4 quid because it was used. What are you thinking? Do you think I pay full price? I'm gonna pay 50 quid for a game with my beautiful profits? No way I'm gonna waste that in a just released game when you have those games that are amazing. Anyways, just 1 hour before going to sleep. That's why I'm a bit tired today. But you can see in here that Ethereum got a little bit more of a capitulation in there, slightly more, and it's happening right underneath the neckline. So I still have the idea that if Bitcoin can reclaim in here, this could reclaim even bigger Ethereum, and it could bring back a rally. It pinched already 3K and it's been collapsing since 5K, so that is already a drawdown of 40%. If we did all the way into 2K, yesterday I explained why we could be going there, that will be a 60% drawdown, and I think that is just too much to survive at the moment, but that is the target of the head and shoulder at the moment on the daily time frame. Now the monthly is back to happy, but we are just beginning November, so we don't know if this is going to stand. Look at this candle, for example, in here. It did a full journey in there. The whole month had a huge, massive range into 49K before going back above 100K. So that's crazy. Monthly can do a lot of things intra-candle, including pinching 93 and then reclaiming. That will leave a similar wick to the downside. So be prepared for even more capitulation and still getting on top of the table some upside. Anything is possible in here, and all these candles are telling you a story. So look at the candles, pause the video and think what happened there. How did it feel intra-candle the first week, the second week, the third week, fourth week of that month being in that capitulation, and how many people were selling in August 2024? Let's go back in time. In August 2024, you have this signal. That one on SOPR was saying, yeah, buy the heck out of that. And we did, because at 74K, I sold all my Bitcoin and I used all of this to rebuy it. What a great move. Now, my mindset is not rebuy everything that I sold of Bitcoin, but it is, swing trade it in here, manage your risk, because the risk is extremely more elevated than doing that in here. It's already 2 stages later than this one. With each stage later, it's not accurate, but think that your risk is doubling, just so you are safer. Yeah, monthly has done some progress in here, as you can see in the price, but in the momentum, we still have one candle settled below support with half a point of RSI, and then we have a continuation of the RSI still pointing down. So technically, we are in a similar situation from the point of view of momentum as we were in 2021. And if history repeats, we could have some relief move. Do not take for granted that we can do as we did in 2021 in October, that we have that revenge rally that gave us a new all-time high. That, consider it optional. This can go up and not necessarily touch the green line, the yellow line, or it could go up and touch it and still not be enough for an all-time high. That only depends on how low first we go. The lower we go, then if we manage to touch that line on the way up, then it brings the possibility of all-time high. It all depends on how much we capitulate. The more we capitulate, the more we punish that retail, the more chances we have of a new all-time high. But if they persist, if they are all bullish, if they are all stuck with the idea of that, of those catalysts that everybody's talking about, if they don't capitulate, then price is gonna have a struggle to put a new all-time high, because it's too heavy to move up with all of them, and the market maker needs to punish them first. That is the thing. Let's have a very quick look in here. We still liquidate primarily longs. We are on the lower end of the oscillator on futures open interest, but not yet below the orange. For talking about a great quality new long, we are below the short-term holder realized price, and we continue to have negative flows on spot ETFs, so purely red, but it has slowed down a little bit. This is the lowest reading with 137 relative to yesterday that was 566. That is a slowdown. We are still in extreme fear. From 23 we went into 27, so it's no longer extreme. If you are interested to get access to trading different trend with a big discount, you can consider the Cyber Monday that is still ongoing up until the 8th of November. I have put numbers to each one of these levels so you can write down in the comments what do you think we're gonna hit first in terms of long-term liquidity pools. All you have to answer is, I think we're gonna go to the upper number 1 and then upper number 2, and then we're gonna go to the lower number 2 and 3. Number 1 on the lower end has already been hit. As you can see, it was hit right there. So now we have only number 2. I personally, I'm not a forecaster of price, but I personally think that first we go for 2 and then maybe we go for 1 on the upper end. But I don't know, if we reclaim now 107 and then things are gonna become bullish, hopefully I'm back at profit at 111 and I take that 117 level as my first potential take profit area. If we go for 2 and 3, well, we'll see that if it happens, then I need to trail my long and scale up that long as well. If we go for 2, well, so be it, then I can start thinking into averaging up my long as well. In that case, it's an average down in terms of the price. Let's look at the 3-month. We have in here 92, and on the lower end below 90s, we still have the largest liquidity pool of the past 30 days being 116.3, and we currently have a little bit more of support. Just as we speak on Market Monkey Terminal, we have 2.6k located between 102 to 102.5, and 98k, the new lower low, if we go there, now has 1.5. Defense is currently placed at 134 with the largest level. All of this is in Binance, but if you look at the colors on the left hand side of the screen, that is a combination of 13 exchanges on spot and futures. Therefore, I will say it's more telling than just looking at Binance, even though Binance is still the largest one. We can see 110, that is the point of control at the moment, and there is an order right there. Below the price, we can see some pulls and some support coming in at 102. That is the one that could defend this to put a higher low and then go for the CME gap. Let's see the rest of the readings. Still on the downtrend on the CBD, shorts dominating, aggressive sellers, longs coming in, shorts coming in, open interest increasing. Fire charts is showing something that I do not see on the other platforms. There is apparently a massive wall of selling into 110, and it's shown as a continuous, which is really crazy and very intense, and the levels are very heavy, like 53 million. So across all this range, there is unprecedented amount of selling pressure to not let the price go above 110. But why is that? This is on Binance, and on Binance in here, I do not see that thing on Market Monkey Terminal. And if I go to High Block Capital and we focus on order booking here, yeah, there is actually support. 1 to 2 is 0.15 is quite bullish. So I don't see that selling wall in other platforms, only on fire charts, which is a bit disappointing that, sometimes you look at the same data in different platforms and they tell you the full opposite. One of them is lying clearly, or maybe 2 of them are lying. In terms of longs, after reaching above 70, which is our signal to look for a long in here, then it came back down to 69. So technically at 69, I have taken longs. So if this remains elevated for longs, we have a chance that those persisting longs can bring the price into 107. If this comes down into 60s or 50s, then we got a local top. So that is kind of a bullish alpha. We still have 170 of delta negative affecting those shorts that are still the most, and the open interest of 1 billion enter at 111 is still there. Those things are bullish alpha because this attracts the price to go there. This one is very mild. It's just 170 relative to the 400, 500k that we have in the previous day. It has decreased. We're running out of petrol to go up from this point of view. But there are other alphas that are saying that there is now a chance for the daily to hold that level and continue to the upside. Let's look at at the fair value gaps before I go and I record the summary that goes into my members from Patreon and YouTube. That summary is just a 3-minute video that goes out in the morning, and in the around midnight UK time goes live and for free to everybody. So we have a whole wall of fair value gaps on the upper end, and we have partially taken this one. There is still left over until 106 more or less, and then we have those ones there. But if this fails, or if we take just the 105 and sharply decline back down, we could go for the 97s. The alpha in here is not that it's for granted that we go up to take those green ones, but there is decent incentive to go there. If these guys were not here, or if they were very thin, I will be telling you, yeah, there is mild to low incentive now to go up. Instead of that, I'm telling you, fair value gaps are supportive of a move up. So given that the SOPR and the volatility has peaked in terms of percentiles, and we have held support on the CPR, we have reclaimed the RSI over this, there is a chance that we might see in the next few hours another attempt for the 4-hour to go up. Thanks so much for watching. I'll see you in the next one. I'll summarize all of this next in a short video for my members. Take care, hit the like, subscribe, write down a comment down below. That really helps the channel. Bye bye.